G'day legends, welcome back to the weekly breakout. I'm Mick Vater, Michael's glitch-free digital double, crunching numbers while he's probably out teeing off on some sunny golf course, chasing birdies instead of breakdowns. Us avatars don't need mulligans, we just reload. Today, we're zooming in on the Sydney suburbs set to boom in 2026. Let's tee off. Quick disclaimer, this video is for education and entertainment only. I'm not your financial advisor, and always chat with a licensed professional before making any money moves. Let's break it out. All right, legends, 2026 is proving to be a steady climber for Sydney's property market. With interest rates holding firm after last year's tweaks, population influx from interstate and overseas, and mega infrastructure like the Western Sydney Airport and metro expansions, experts are calling for 2 to 7% citywide growth. But some suburbs are primed to outpace that, with double-digit potential in hotspots driven by affordability, jobs, and connectivity. We're pulling insights from reports by realestate.com.au and Fraser's Property. Think low stock, fast sales, and big developments fueling the surge. Let's break down my top Sydney picks for 2026 booms, focusing on fundamentals like rental yields over 4%, vacancy rates under 2%, and population growth corridors. We'll start in the west and fan out. Western Sydney is the star thanks to the Aerotropolis and new transport links. Silverdale tops the list, median house prices around $1.4 million with 3 to 4% growth forecast in the next 6 months alone, potentially hitting 8 to 10% by year end. It's got that semi-rural vibe with urban upgrades perfect for families eyeing land packages. Nearby, Leppington and Austral are exploding. Leppington's medians at about $1.1 million, benefiting from metro extensions and airport jobs. Expect 7 to 10% uplift as commuters flood in. Austral's similar, with $1 million medians and strong demand from first home buyers, driven by new estates and affordability compared to inner city spots. Heading to the southwest, Edmondson Park and Oran Park are investor gold. Edmondson Park's got train links and shopping hubs, medians around $1 million, tipped for 6 to 8% growth. Oran Park, with its master-planned communities, is seeing quarterly jumps already. Aim for yields over 5% here. In the inner west, Haberfield and Dulwich Hill are gentrifying fast. Haberfield's Italian heritage charm, close to the CBD with light rail. Medians at $2.5 million, forecast 5 to 7% growth for families wanting that village feel. Dulwich Hill's more affordable at $1.8 million medians, with cafes and connectivity boosting appeal. Up north, Macquarie Park and DY shine. Macquarie Park's tech and uni hub, medians $1.2 million for units, expecting 6 to 9% from job growth. DY on the beaches offers lifestyle with $1.5 million medians, strong rental demand from young pros, 5 to 8% potential. Eastern suburbs, Randwick's a standout, medians $3 million, but with uni expansions and coastal access, it's set for 4 to 6% steady gains. For something edgier, Bayview in the north is premium at $3.5 million, but low stock could push 3 to 5% growth. Don't overlook South like Barden Ridge, affordable at $1.5 million, family-friendly with bushland, tipped for 3 to 5% rises, or Mount Annan in the Macarthur region, medians $900,000, drawing buyers with parks and schools for 6 to 8% potential. And for fringe plays, Central Coast spots like Gosford are essentially Sydney extensions now, with fast rail. Medians $800,000, 7 to 10% growth from hybrid workers. Legends, the takeaway? Hunt suburbs with real catalysts, infrastructure, jobs, and undersupply, not just buzz. Check days on market under 30 and aim for areas with 2% plus annual population spikes. If these booms have you hooked, swing by xcape.com.au for finance chats tailored to your swing. What's your top Sydney pick for 2026? Comment below. Thanks for watching. Smash that like, subscribe, and ring the bell for more breakouts. Catch you next week.